Okay, so this is the regular accounting system. I've talked about this a little bit, but what we're looking to do here is we collect data, we categorize them according to the IRS rules. Secondarily, we also want to categorize them according to the reports that we're trying to produce for the business owner. Then the data is entered, reconciling the accounts, exporting it to the financials, meaning the profit and loss statement and balance sheet. Those financials are reviewed by the CFO and the controller and the auditor, and then we go through the process of the machine called your business, evaluating, budgeting, dashboard, and on like that. This is an example of a client who came to me whose books were a mess. Just a tub filled with papers. I go through and start, putting things in piles, finding out what are the like things in there. It'll tell you it's so much easier if you have stuff on spreadsheets, if you can get downloads. Paper is a lot harder to work with, but we can do it. Eventually, we have to start making diagrams. I use the walls for that sometimes. Think of it like an FBI profiler trying to, tie what is this number and how does that get over here, and categorizing things until at some point we can come up with something that looks like a set of financials. This is the cash flow equation. It's pretty simple. How much cash goes in and how much cash goes out directly has to reflect on how much cash you have in hand. That's your retained earnings that we talked about. So it's always flowing. You can't change that, but what you can do is you can try and reduce your outflow, increase your inflow, and watch your savings go up. That's the goal. In this slide, what I'm talking about here is what I call your token cost. I mentioned this at another spot in the series. So essentially, think about it like this. You're down here in the Shark Tank when you start off with, and this isn't the Shark Tank where you're raising money, but this is the Shark Tank where the IRS, the Department of Revenue, they're all trying to get your money. And what you're trying to do is survive. You want to get out of the tank and start flying. If you don't, then your business dies. Just not enough there to cover everything and you just give up. Through the power of bookkeeping, work, do, learn, change, you earn the money, we report, you pay on this cycle. If you can make enough where you can get over that third hurdle, then moving into the philanthropy hurdle, that's where the real savings starts to begin. So the goal is to get you out of this tank and get you up into the real savings. But to do that, you got to know what your annual token cost is. And if you don't know your annual token cost or what it costs for you to live personally, including all your taxes and discretionary savings or discretionary spending each month and each year, then it's going to be really difficult for you to know how much your business needs to make. But with proper bookkeeping, you can reverse engineer this formula back down to figure out how many customers you need, how quickly you need them, whether you're going to borrow money, do you need to expand. All these questions can be answered if you start off knowing what your token cost is.